It's about that time of day again here, boys and girls. Welcome back, welcome back. Happy Tuesday evening. This is the 10th day of the 6th month of the year, June 10th, 2014. Welcome back to our nightly newsletter. My name is Joseph James, broadcasting live from our corporate headquarters here in Los Angeles, California. Hope you guys had a great Tuesday. Now, we have another exciting newsletter in store for you guys here this evening. First of all, we'll talk about what happened in the markets today. Then we'll look at what we have in store for tomorrow. We'll take a look at the news for tomorrow. We finally got some big news coming in the U.S. And you know how it always goes. We're going to finish up the newsletter tonight by looking at all the charts and providing you with strategies, right? Not just levels, but strategies to be able to profit from whatever comes our way tomorrow morning. In tonight's newsletter, gold jumps higher. Crude tumbles a little bit here this morning, and Russell trades sideways. We're going to take a look at the crude, the Russell, and the gold here this evening. We'll take a look at what happened today, and then we're going to roll up our sleeves and prepare for tomorrow. We also had some news today. Not much news, right? Most of it happened in Asia and London, and we're also going to get ready for tomorrow's news. We finally have some important news on the schedule in the U.S. session. And of course, before we finish up tonight, we're going to give you guys strategies to be able to use tomorrow no matter what happens, whether we go up, down, or sideways. Now, before we jump into the charts here this evening, I want to remind you, if you're not over on our blog right now, if you're watching this video on our YouTube page or on some other website out there, make sure you get yourselves over to sidewaysmarkets.com. There's a link right below the video on our YouTube page, right? Or you can use your browser and go to sidewaysmarkets.com. Why? Why should you head over there? Well, because, there are three specific reasons why you got to get over to Sideways Markets right now. First of all, you can download all the charts that are associated with today's video. Now, what could you possibly do with that? Well, if you're a member with me in the trade room, bring those charts with you tomorrow morning, because at 8 o'clock in the morning, we're going to do our morning prep, and we're going to use all these charts. If you're not a student in our trade room, that's okay. These charts, click the link right below the video and download a copy of today's charts and all the commentary. That way, you'll have it tomorrow morning or this evening, right, or next Tuesday, right, that you can use in your own trading. I take a little bit of extra time every day to make sure I post those charts, so make sure you guys click on that link below the video and download a copy of the charts for your own use. Next, upper left-hand corner, take me up on this offer, guys. This offer, you're going to learn more in my trade room in a matter of hours than most people are going to charge you for and waste your time for weeks and weeks. All right, I'm going to give you a free pass to come out and join me tomorrow or any afternoon this week in my live trade room. I want to show you how simple it can be to use the newsletter to make profit the very next day. So come out and join me tomorrow. I got a free pass for you, upper left-hand corner. All I need is your name and your email address, and we'll have that free pass emailed right out to you. And then, of course, last but not least, lower left-hand corner, right above my ugly mug, we've got your nightly newsletter email list. Make sure you take a moment to give me your name and your email address. If you find value in this newsletter, I want to send this to you right away every evening when it gets finished up. All right, so no more checking the news or no more checking the YouTube page. I'm going to send you an email every time we post our newsletter. Without any further delay, make sure you guys get over to sidewaysmarkets.com, download the charts for today, get yourself that free pass to attend our trade room, and don't forget to join our nightly newsletter. And while you're here, I think there just might be a few things on this blog that just might get your interest. All right? I promise it will be worth your time. Let's get moving. What happened today? Well, boy, I'll tell you, we had a Monday filled with fireworks, didn't we? Last time we talked, it was Monday evening. We had seen a fireworks show, markets reacting to non-farm payrolls, reacting to the ECB report, and for the most part, our plan was relatively simple. We needed to wait for price to pull back off of those highs, right? So we could get into some trades, buying again. Crude this morning crude had a pretty active day, right? Pretty active day. You can see here, we gapped up at the open this morning on crude, right? Kind of finished off this push from yesterday. If you remember yesterday afternoon, we talked about the fact that we closed right at the high. It was very bullish going into the end of the day on Monday. Tuesday, those buyers picked up right where they left off. We gap up, we fill the gap, and then we touched just above 105. All right, now we had some major resistance overhead in the form of a trend line. Not sure if you guys remember that from last night's newsletter, but there was a trend line up there around 105. So reacts off that trend line, and then what really is incredible about what you're seeing right now in this chart is, let's go over all the details. First of all, where we opened. We opened higher, right? That was bullish. But look where we closed. We closed all the way down near the lows. Now this right here, this is a short covering rally. All right, it definitely is, right? It's a short covering rally because most of us, myself included, was selling short on the way down, right? So this clearly tells us people took their profit at the end of the session, like we always recommend you guys do, right before the closing bell at 2:30. So we try to go higher, all the way to 105. We then try to push lower. We get a short covering rally. Again, the short covering rally is really important because this tells us, well, think about what happened yesterday. My exact words last night were that there was no profit taking at the high. Now look at this example from today. There was, right? Definitely profit taking at the low. So that tells me that traders are a little bit indecisive. They don't really know where they want to go. We weren't strong enough to go higher. We weren't weak enough to drop back to that prior week high. I mean, I'm telling you, this afternoon, as I'm selling this thing down, I'm thinking, oh, baby, just give me the money now, right? We're going right to that prior week high. Dotted lines, right? Dotted lines, my bread and butter. If you've been in my trade room, we love using dotted lines as profit targets. And so we were thinking, oh, boy, right? I can smell the cash right now. Just give me the money already. But you can see, though, rather than selling off into the close, right, they took, of course, their time, covered their shorts, and price flutters back up. Now, that's all fine and dandy, right? Get a little bit of a balanced market. But the big clue on this chart, the big clue, is the volume. The volume, you can see 104.48, right? The volume, now look closely. It's the high from Monday. Wait, what? So you're telling me that we pushed higher, we pushed lower, and we finished with all the votes being cast one tick, 104.48, right? Yesterday's high was 104.47. So pretty much right at the prior high of day. What does that tell me? Well, it tells me that we are balanced. It tells me that crude oil traders, right, the market participants, and this is the beautiful thing about being a day trader, the price is the truth. The price never lies. It tells me that although we flirted with this 105, we do not see value at 105, at least not right now. Now, of course, big hurricane announcement comes out tomorrow. Yeah, sure, we'll see value higher at 105, sure. Right? We hear some more of shenanigans in Ukraine. Sure, we may find value above 105. But as of this moment in time, we do not have value anything more than 104.48. So this tells me right now that we have a balanced market going into Wednesday morning. Now, Wednesday, that should ring a bell because we have inventories on Wednesday. We saw the API number, right? The American Petroleum Institute, they produced their inventory report, their preliminary inventories, right? There was a little bit higher than expected inventory, so of course that will be bearish. So we got a bearish report coming out tonight. We'll have to wait and see what tomorrow news looks like at 10:30, but this market right now is looking for answers. This market right now just came off a sugar high, right, after Friday's non-farm payrolls, right? This market was on a tear after non-farm payrolls, but it looks like those buyers, well, you know, they're, what would I always say, right? Their eyes may have been a little bit bigger than their stomach. They may have been a little bit too aggressive here and couldn't quite keep it above 105. So I'm seeing a completely balanced range right now. We're still above last week's high, But if we don't go higher here, all right, if we do not go higher, if these buyers cannot hold on to this rejection is a huge clue, right? It's a huge clue. If we don't go higher tomorrow, we're destined to pull back to the prior week high. We got this gap here from 103.46 to 103.07. If we break through that gap, those gaps get filled like rocket fuel. No pun intended, of course. Right? So that gap will get filled if we break below that 103.46. And then look where we are now. Now we're right back to where we came from. Wouldn't surprise me at all. I have made, well over $1 million of my career watching crude oil get bought right up, staying patient, not buying the highs, and then once we see that sign of weakness, look out below, it comes right back to where it came from. It's a classic fake out, breakout, fade the breakout. It's classic crude oil. Now, of course, you've got to have some experience watching this market, the black gold, the Texas tea. What I call in our training classes, I call it the intimate relationship with the market you're trading. Now, here's the best part. I've spent the last 14 years of my life, almost 14 years, almost half of my lifetime on this planet, I've spent watching this market. So you know how it goes, right? You can get experience watching this market two ways. One, pay a coach that has experience. Or two, get a comfortable chair, a lot of coffee, and good luck over the next 13 years. You see what I'm saying? So come join me. Come join me in the trade room tomorrow morning, and I'll explain to you what I know about crude. I'll narrate every tick of the market, telling you what this means and how we are going to capitalize on it in a safe, right, and effective way. So right now, balanced on crude. Very surprised that we didn't get to that 103.69. Again, as we're selling off here, we pulled a little bit of a U-turn, and then you see the volume here at 104.48. So tomorrow, don't be surprised if tomorrow is a narrow range. Don't be surprised if we get stuck right here between 104, 105 and 104. All right? Do not be surprised if we get stuck. But if we don't, if we happen to tumble here, now you know what I'm looking for. 103.69, 103.46, 103.07, 102.67. All right? If we go higher, it's probably going to be a rocky ride higher here, right? Because again, remember, we got this resistance area overhead, which I'm going to show you in just a moment. As of right now, balanced, if not bearish, on crude. But I got one more chart for you for all you crude traders out there. So stick around. All right? We're going to give you guys some strategies for trading crude tomorrow. Speaking of strategies, look at this chart. Here comes the mighty mini Russell, one of my favorite E-mini markets. Now, this shouldn't be too much of a surprise. Let's take a moment to think about Monday. What happened on Monday? 180 ticks of range, right? It was a big move day on the Russell, okay? Just like crude, had a big range day on Monday. Again, have that kind of, that sugar high. We had 4 sessions in a row. If you actually go back here, you'll see there's 1, 2, 3, there's 4 consecutive sessions in a row of nothing but bulls in charge. We were destined to get a break, right? If you ran a marathon every day for the last 4 days, you would probably need a Tylenol, right? And maybe a margarita to go with it, right? You would need a break to go as well. So big ranges over the past few days. If you're a student with me in the trade room, you hear me say this every day. Big range today, small range tomorrow. Small range tomorrow, big day the following day. So we were due for this. Now look what we actually see here. We opened up, well, first of all, remember, we closed in the middle yesterday. We opened in the same spot. That tells me this thing was snoozing away overnight. Nothing affected overnight. We go lower, we bounce off the prior week high, we close above the prior week high, we close above the prior week close. We're still just as bullish as we were. But you'll notice, though, we close right back to where we finished the day on Monday. Where's my volume? Volume is also right through the middle. What does this tell us? It tells us almost identical to what crude told us. But the big deal on crude was that crude is showing signs of bearishness, right? Because we sold off. Not that strong to the downside on crude, but we definitely saw some cracks in the sidewalk, so to speak, from the bulls. On the Russell, we got complete balance. Volume in the middle, open in the middle, close in the middle, right? We've danced around the prior week high, we danced around the prior week close, but we stayed above. That's the key. So right now, you could almost forget about the day even happened, right? Right now, my main numbers are still going to be the prior high and the prior low. Those are still my main numbers here. So I need some more. I need a little bit more information on this Russell. We only got 90 ticks of range today, which means tomorrow we do expect a bigger range. But again, this market looks completely balanced. And it makes sense. We went on a rocket ship ride, right? Literally rocket ship here ever since last Friday's non-farm payroll. There's going to be some profit taking at the high. Now, if you remember, I can't recall exactly what the level was. Oh, yeah, that's right. It was this one, 67.9. Can't forget about that, right? Do you recall that was the level, that was kind of the line in the sand I gave you guys last night. And I said, if we happen to get below that level, look out below. We tried. We did. We tried. In fact, in the room this morning, we were watching as this thing tested that 1167.9, and we were all ready to get to selling short, right? I was ready to see this fuse lit and sell this baby off. Never happened, though, right? Never happened. Just because we got below the 67.9 didn't mean we were blindly selling short. We still had to wait for the commitment from the sellers, and we had to see the pattern. So balanced on the Russell here right now. And again, if we stay inside this range, it's like nothing happened. The minute, though, I push above the 1180.4 or below the 1162.1, that's when I start to care. How do we trade it? If we stay inside, we're buying lows, we're selling highs. If we go higher, we're looking for buys. We go lower, looking for sells. Where are we going if we look for sells? Well, first of all, we get 1155, right? That was the high from Friday. We get the prior week open down here at 1135.9, and of course, wishful thinking. Don't I wish I could sell short down to that prior week low, but that is a reality. Remember, if we don't see some continued buyers here, if we don't have these buyers keep this thing propped up like this, the markets do not just sit here. We're not operating in a magnet. In a vacuum, excuse me. Luckily, I'm not an English teacher. So, of course, balanced market, narrow range. We could see some more fireworks tomorrow. But we got to have something come in and start to give this Russell a push in one direction. Now, on the next chart on the Russell, I'm going to give you guys some strategies for trading this Russell tomorrow. So don't go anywhere. This is just what happened for today. And then last but not least, we got that funny yellow metal, right? That gold futures market. Now, yesterday we talked about, my gut told me last night that we'd go higher. And you can see we did go higher here, and a little bit higher. But I think the biggest thing right now is that we're above the prior week high. We're above the prior high of day. We're above all those important levels now. Now, this chart, to be honest with you, doesn't really get me going, right? It's the next chart I'm going to show you. So if you're looking for strategies on gold, you want to stick around, right, for the very next chart we're looking at. I'm going to give you guys some strategies here because we finally have some technical clues now that we can use for buying opportunities on gold. It's been a few weeks, right? 2 weeks ago, we made an absolute killing selling short on gold. Now we're here looking at buying opportunities. As you can see, though, very narrow range today, 98 ticks of range. Okay, we opened pretty much right where we left off on Friday, right? This is last Friday's close. We closed pretty much the same spot, opened the pretty much same spot. So we had this analysis paralysis, and we assume that's coming from what? That's coming from the ECB's negative interest rate policy, right? Or NERP, as I've seen them describing it, right? NERP just sounds like something horrible, so we're not going to use that acronym. But the negative interest rate policy definitely, Did you know how to react to it? No, I'll bet nobody did. It's been unprecedented information. So we kind of figured it's going to take a little bit of time for that gold to react to it, right? This was nothing we've seen in recent history. So finally, gold, again, I think the most important thing here is we go above the prior week high, we close above the prior week high, and you'll notice the volume is above the prior week high. I can tell you right now, it's not bearish, it's not neutral, it's definitely bullish. Now the question is, can we trade this? And what I'm going to do next is we're going to look at this chart and we're going to see what our plan's going to be here now to capitalize on gold. Before we get there though, let's take a moment to think about what do we have in store for tomorrow as far as news goes. Now remember, we had non-farm payrolls last Friday, which means the Monday following and usually the Tuesday following have no major news in the U.S. So we have been fortunate to have some good trading opportunities without much major news. Well, of course, that comes to an end right now. Tomorrow we finally have some important news, albeit not a lot. We don't have a lot of news tomorrow. But looking at this, though, we're going to start with tonight. We definitely have some news coming in this evening out of Asia. I've got 7:50 p.m., so in just a few minutes here, you're going to see your PPI number, your producer price index, right? Deals with inflation, deals with currencies. That'll be, of course, from Japan. So if you're trading the Asian session here overnight tonight, you know you've got some news to wait, right, to look forward to. Moving forward into tomorrow, the only red star news we have tomorrow is going to be coming from Great Britain. This is actually pretty important. Now, they call this the labor market report. It's the same thing as our jobs report, our non-farm payrolls. So you guys and gals trading the London session tomorrow, be on the lookout, watching the pound, right? Watching possibly the, basically I'd be watching DAX, I'd be watching FTSE, I'd be watching Euro stocks, I'd be watching all the fixed income, the buns, the bobble, the buxel, right? So that 10 times fast. So tomorrow morning, 4:30 a.m., your labor market report sounds very official, right? It's just like our jobs report. It's just like our non-farm payrolls. That's going to get the European markets going here nice and early tomorrow. Then, of course, we've got two important news events tomorrow in the U.S. One of them is going to be in the morning session. The other will be in the afternoon session. Let's talk first here about the 10:30 a.m. news. Crude oil inventories. Now, pretty much every Wednesday, unless Monday's a holiday, we have inventory report on Wednesday morning at 10:30 a.m. Now, this evening, we saw the API number come out with a mild increase in inventories. When we have an increase in inventories, that will usually mean lower prices, all right? Unless, of course, there's something else out there that we don't know yet. And that's why we don't try to predict the news. I have no idea what tomorrow's news is going to be. And even if I did know exactly what that news number would be, I still have to wait until see tomorrow what the reaction is. So the way that I trade the news is by knowing when the news is, being prepared to sit on hands ahead of the news, and then waiting patiently after the news comes out to see what the reaction is from that news. I'm not trying to predict, all right? Not only am I not that smart, right? I'm not some brilliant Mensa, 190 IQ, right? I'm just like you guys and gals. I'm just a hard-working individual who loves to trade. And I know that tomorrow morning, because we have crude oil inventories at 10:30, I'm going to be suspicious. I'm going to be expecting to see a little bit of slop and chop out of crude. I hope I'm wrong. But usually crude oil before Wednesday's inventory number is going to be a little bit sloppy. So be prepared. I am going to sit on hands tomorrow morning 15 minutes before the news and then at least 10 minutes after the news. Now the reason why I suggest that is because 15 minutes before the news, people start to do crazy things. They start to predict, and you're going to start seeing price action pick up about 15 minutes before, but it's very difficult to anticipate direction, all right? And then after the news, it's very important. It's very important. Listen up to this. If there's one thing I've learned in reading the news, no matter what the news report is, crude oil especially, this really hits home for the inventory report tomorrow. The initial reaction is often the opposite way it's going to go. If we see a bullish reaction right at 10:30 tomorrow morning, I'm going to be looking to get short. Well, I shouldn't say that. I should say that I'm going to wait until about 10:40. And then, after I saw the initial reaction, are we continuing in that direction? Usually, we end up reversing. It's what happened last week. Remember what happened last week? That big, huge spike up, right? We saw inventories that were bearish and wham, price in the opposite direction. That's what you're looking for. Wait until about 10:40, 10:45. And remember, guys, here's the beauty of trading after the news comes out. There's no first place ribbon. There's no prize for being the first person in. There isn't. Nobody cares. When you cash your big paycheck at the end of the day tomorrow, because you took my advice and you stayed patient for tomorrow's 10:30 news to come out, and you didn't get gobbled up by the swap and the chaos between 10:30 and 10:45. If you stay patient tomorrow, you wait for proof of what direction we're going in. As I said before, there's no first place ribbon. There's no prize for being the first person to guess right. So stay patient. All right? We don't need to trade that news. These markets move 23 and a half hours a day. So don't get greedy, don't get impatient. Be careful tomorrow around that 10:30 news. But look for some great moves, though, after 10:45. Now, I'll be in my trade room tomorrow trading that report once it comes out. Come join me. I'll walk you right through how I'm going to capitalize on whatever happens at 10:30 tomorrow morning. Then, here's something very, very important for you guys tomorrow. We have early afternoon news. Now, this Treasury budget news, not a huge report, all right? But over the past few years, we've seen a lot of emphasis placed on the budget, right, at the Fed, the budget in our Treasury, right, for good reason. So we know there's going to be a bunch of eyeballs focused on that news report. What we're going to do tomorrow is we're going to expect lunch to start early. Whenever you have news before 2:30, 3 o'clock in the afternoon, Eastern time, you're going to see the volume will slow down about 11 o'clock, 11:15. It'll be a little bit earlier than normal. So we have 2 o'clock news, Treasury budget. Be aware. If that personality starts to trim down, if we start seeing low volume, ATR right ticks down. If we start seeing range-bound markets around 11, 11:15, 11:30, you know why. Traders are getting out of the office to grab lunch early so they can come back and be in front of their desks, right, when the Treasury budget announcement comes out. Alrighty? Tomorrow afternoon, we've got news out of New Zealand, and then tomorrow evening, we have more news out of Japan, and then another jobs report coming out of Australia. Okay? We'll talk more about those late in the day news reports in tomorrow's newsletter. But again, this evening at 8 o'clock, there's news out of Japan. Tomorrow morning, 4:30 a.m., you've got your labor market report, and of course, we've got inventories tomorrow for crude, and then the afternoon tomorrow, we get Treasury budget. Okay? And again, tomorrow morning, my students in the trade room, we're going to roll up our sleeves, mark down the news, and we're going to trade that news together. Okay. Now that we know what we're expecting for tomorrow, let's tackle the markets and let's put together a plan for tomorrow's price action. Now, as you can see here, gold has been falling lower, right? We saw that range-bound market. We bought the lows. We sold the highs. When it collapsed, we sold short. We've made some great money on gold in 2014. But then we had this little issue down here, right? We had the whole ECB waiting game. Price went sideways. We have been waiting for this to move higher so we could sell this thing back down. So long-term is selling opportunities. If you want to sell right now, I've got chances to sell at 1269.3, 1276, and 1285, right? Among other things at the top of this channel. And then, of course, you got the 1299 and 1307. So long-term right now, we want to be selling, right? Long-term. But in order for us to get short, I need to get up to this 1269.3. And then as I go lower, which of course will be later this week, we have targets now 1235 and 1228. So those are our easy targets to the sell side below us. But if you recall, we've been moving higher. So we're going to have some short-term scalping opportunities that will get us buying tomorrow. Keep that number in mind, 1269.3. Now let's go over and take a look at our faster anchor chart. So here's my 69.3 right here. Okay, there it is right there. Let's get this one out of the way here. Okay, looking good. So, if you're looking for a long-term play, selling is what you're looking for. But right now, in the short term, we have finally now broken free of this chop and slop area. If you recall from late last week, early this week, we talked about the fact that we had to get the heck out of this area here. Now we are making new higher highs. We're above all the key moving averages. Okay, we saw on the VIP chart told us we were bullish, right? We weren't bearish. So we're seeing bullish on the VIP. We know, though, we've got long-term selling on gold, but this is going to give us a chance to make some money in the short term. I've got buying opportunities, 57.9, 57 even, 55.3, 53, 52, 49s. So as we pull back here, I'm looking for buying opportunities right now at any of the levels I've marked up here on the chart. Where are my targets? I've got targets now at 66.7. There's that 69.3 right there. And of course, we've got your 71.3 and then 72.6. So, we know we've got that target just screaming at us at 1269.3. So what's the plan? I want to buy at a discount. We've pulled back here. I now have the green light to be buying here on the way up to the first target at 66.7, right? The money target's going to be at 69.3 in tomorrow morning's session. We'll see how we do. Now, don't forget, I'm not just blindly buying this. I'm going to wait for price to make the turn, and when it makes the turn, I find the entry pattern to get long. All right, so now you know the plan for tomorrow on the gold. How about the Russell? Now, the Russell, again, has had the last 4 sessions in a row, we've been bullish. We've been waiting here for this pullback. All right, as you can see here, little A, B, C, D, 1180.6, that was the major turning point, went right to it. We saw that last week, right? That's been there for about a month. Okay, that level at 80.6 has been there about a month. So we've known about that resistance for quite some time. We are pretty much in the same spot we left off yesterday. We're up near the highs. I don't want to buy it at a premium. I want to buy at a discount. So my plan right now is really the same thing it was yesterday. I would love to sell short in the short term, right? In the short term, I can sell short. But I got targets down here at the 1150 symmetry support, 1148, and 1140. I've also 1145 right there. So in the short term, we're definitely looking good to find some selling opportunities to bring us back down, right, to the lows of this range. The long term, though, I want to wait patiently for price to get to this area of symmetrical support, right, and then push higher again. So right now, in the short term, I've got selling opportunities. In the long term, I've got buying opportunities. All right, now, let's take a look a little bit closer to this area, and let's see what it's going to take to get selling short. And let's put together some scenarios for tomorrow. Here's my faster anchor chart now in the Russell. And like I always do, every morning, Monday through Friday at 8 a.m. when I open up my trade room, let's think about the 3 possible scenarios. What if price goes higher? What if it goes sideways? And what if it goes lower? If it goes higher, we already know we're bullish. So if it goes higher, the only thing we have to worry about for tomorrow is not buying directly into this 78.6, 77.1, or 1180. as long as I don't buy directly into that area. For example, if we just blow right through this 88.6, this 80.6, I'll gladly start buying again, right? But again, I'm not going to buy right into resistance. I've got to see us break that resistance before I start buying. So if price goes higher, I'm looking for more buying opportunities. But I need to be careful not to buy directly into these two resistance areas on my chart. What if price goes sideways? If price trades sideways tomorrow, right, double bottom, double top, very simple. I'm going to mark the highs and the lows of that range, and we'll buy the lows, we'll sell the highs. And you know what Mama says? Mama always tells me, don't fiddle with the middle, JJ. We'll stay away from the middle. Okay? Now again, this morning, we were looking for price to get below that 67.2. Just never did, though. It never quite gave us the drop. But what if price goes lower? What do we do tomorrow if price goes lower? Well, if it goes lower, I've got to get closed below 1162.1, right? It was a little bit higher than that yesterday, but we were able to poke our head below that. So now I'm going to say below 1162.1, right? And I'm not going to sell short immediately below 62.1, right? I do not have a sell stop waiting there. I'm going to wait for price to get through it, and then we're going to wait, see those sellers initiate those lower lows, and we'll sell short down to the 1148, 1140.6, right? So this is the same stuff that we saw on the previous anchor chart. Now we're putting together some strategies. So again, my goal here is if we go higher, I'm going to keep buying, but I'm not going to buy right into that resistance level. If we go sideways, I'm going to mark the highs, I'm going to mark the lows, I'm going to buy the lows, I'm going to sell the highs, I'm going to avoid the middle. If we trade lower, I'm not doing anything except buying that low. If we go lower, I'm going to look to buy that low first. But you know what I'm saying, below that 62.1, once we get below it, look out below, I'm looking for selling opportunities down to the 1148. And then we'll be back to looking for buys again. Right? So right now, long-term buy, short-term sell. Well, I shouldn't say that. Short-term, remember we saw on the VIP chart, it looked pretty balanced, right? The balance that we saw on the VIP chart tells me unless something comes in and nudges this market up or down, we may be sitting sideways tomorrow too. All right? Tough to tell right now. We'll have to wait and see what it looks like right when we get our charts open tomorrow morning. All right? You know me. All I can do is define the trend, find my levels, and then make sure my market personality agrees with that trend and trade away. That takes care of the Russell. Now we got the good stuff, right? One of the more active markets of the day today, crude oil pushed higher and then collapsed back lower. If you're looking for a big picture view of this, now you can see where we are right now. This was that resistance I was talking about on the VIP chart. We went up, we kissed the 105, and then we tumbled back off of it. Remember, we had that trend line that we had drawn in there months ago, right? This is, well, maybe not months ago, right? This day here, 28. So a few weeks ago, all right? But we've known about that trend line for a while. As you can see, we're definitely bullish in the long term here, right? We're above all the key moving averages. We're making higher highs. We're making higher lows. And right now, with the exception of this stingy trend line right here holding us up, we get a pretty easy job here, looks like, getting to that 106.56, 107.93, 108.83. Those are our targets above. If you recall last week, we wanted price to pull back after that new high. That's exactly what it did. If you remember last week, guys, we gave you the exact area there to buy, right? That 101.45 area. So, of course, it pulls back, goes higher here now, and we have a little bit of resistance there from that trend line, and that's most likely going to continue, all right? I don't think, from what we saw today on that VIP chart, I just don't see these buyers as strong today as they were this time yesterday. Now, today may be a break, right? The crude traders, they may have taken a pit stop for a little smoke and a pancake or two, right? They may have just taken a break. So we're going to have to wait tomorrow and see what this looks like, right? But again, the VIP chart today told me, no, we're definitely going to be balanced here, at least right now. Now, let's put together a plan for tomorrow. All right, here's the plan. Here's the plan. So now we move over to our crude oil. This is my 32 anchor. This is the faster of the anchor charts on tonight's newsletter. We are well above all the key moving averages. We're getting new higher highs, right? We had this little channel that took us down into non-farm payrolls last week, and then whammo, right? We bust out of that channel. So, of course, you know me, right? Same thing we saw yesterday. I didn't want to be a buyer at the high. All right? I don't want to be a buyer at the high. So I wait for price to pull back, right? I want to buy at a discounted price. So what I'm going to do now is I'm going to wait for price to pull back, right? And then as it starts to go higher again, I've got some great targets. 105.22, 106.41, and 107.73. Okay, 105.22, that's the easy money target. 106.41, that's the good-looking target. And then all the way above 107.73, right? That'll be a home run target for us later on in the week if we can get lucky here. So what's my plan? What if price goes higher, right? Let's talk going higher first. What's my plan here? If price goes higher, remember, we are long-term bullish. We're above all the moving averages. There's nothing keeping me now from buying. If price just goes higher here overnight, I'm getting to buy. Take my money out at 105.22 and then look to hold a runner to 106.41. The only thing I don't recommend is trying to buy right at 105.22. So if price goes higher, we know we're prepared for it. Long-term trend is bullish. Get to buying. If price goes sideways, this is always an important thing to remember, right? Price can definitely go sideways. So mark the high, mark the low, stay the heck out of the middle, buy the lows, and sell the highs. Now, what we're going to see tomorrow is we're going to most likely see a little bit sloppiness before that 10:30 news comes out, right? Just like we talked about at the beginning of the session tonight. So don't be surprised if we trade sideways before we end up going higher or lower. And what time do we think that will be tomorrow? Around 10:30 when we have that inventory report that comes out. Now, what if price goes lower? If price goes lower, this is going to be a little bit tricky because you're probably going to get, right, you're probably going to get a pretty quick move lower. Remember, we've made a big move up over the past few weeks. So you're going to see some profit taking. If these buyers do not, like I said earlier, if these buyers do not keep this thing propped up, you're going to see some profit taking. And remember, we got that 103.69, that's the prior week high. We get the 103.46, the 103.07. So 103.69, there's your 103.69 right there. So don't be surprised if we pull back, maybe go a little bit further than 103.69, right? Maybe to 103.47, wink, wink, right? That gap fill, right? Bottom line is, though, is that, yes, you're going to have some opportunities to sell short if this thing takes off the downside. But pick your battles. Again, I'm not going to sell short directly into these areas. All right? So make sure you're not selling short into support. The best plan right now is going to be to wait patiently for price to hit some of these support levels. And then once it starts to react, then we know we got them. Right? It's much easier to react to the pullback that reverses and starts to go higher again. Remember, there's no first place ribbon for being the one that calls the reversal, right? Nobody cares. All we care about is did I make money? Whether I make my money selling short tomorrow morning or whether I make my money waiting patiently and then tomorrow afternoon after the news comes out, get ready to buy it back up again. So right now we get a bullish trend. We're bullish in the short term. We're bullish in the long term. On crude, expecting a range-bound market tomorrow, right? At least before 10:30. Be ready. If we go higher, I'm buying. Just don't buy into 105.22. If we go lower, I have a very small window of opportunity to sell short. Okay, that 103.69, right, the prior week high, that's a big deal. So as we go lower, I'm waiting to stay patient here to see if it goes higher again because that's where the easy money is going to be. Rather than trying to sell short against the stream, Let some other poor trader do all that hard work, wait for tomorrow afternoon, and then buy it back up once we get the reversal. Again, tomorrow I've got inventory number coming out at 10:30. I'd be lying to you if I told you exactly what I thought was going to happen. I have no idea. All right? I have no idea. Just like anybody else, all I can do is come out tomorrow morning, identify the trend so I can follow that trend, identify my major support and resistance levels, which I've given many of those to you right now, and then I got to make sure my market personality agrees with that trend, and then trade away. Find the pattern, and in you go. Alrighty? That will do it here for this evening, boys and girls. I want to thank you so much for stopping by our blog. Check out the blog at sidewaysmarkets.com. And don't forget here, the SchoolOfTrade.com, we are celebrating our 10-year anniversary this year, 2014. Been around for 10 years. We're the longest running trading education website on the internet. Check it out. You'll see what I'm saying. I've been doing YouTube videos as long as YouTube's been around. All right? Not like all these other schools that simply pop up and they close down. They pop up and they close down. So we do something right for our clients, and we offer beginner, intermediate, and advanced memberships. We offer lifetime memberships. There's no pressure to earn. And guys, we offer one of the best free trials in the business. You're going to learn more in our free trial than most people are going to charge you thousands of dollars, right, to be a student of. So check it out for yourself. Join the free trial. Register as a new student. And come join me tomorrow. I'm excited to see you tomorrow morning in our live trade room at 8 a.m. Eastern Time. We've had a great week so far. We got more coming, though, tomorrow morning, Wednesday morning. Major news in the calendar, a lot of opportunities here, but we got to stay patient and wait for those best opportunities to come our way. Have yourselves a fantastic evening. Don't forget to share this information with a friend, and don't forget to come out and see me tomorrow at 8 a.m. Eastern Time as a student of the School of Trade. Signing off now from our corporate headquarters in sunny Los Angeles, California. My name is Joseph James. Thank you so much for stopping by. So we'll see you same time, same place tomorrow. Adios, amigos. Bye-bye for now.